So in this lesson, we're going to be looking at the initial breakout again in a little bit more detail. We're going to break it down into three separate categories: IBO A, IBO B, IBO C. So there are different versions of the actual initial breakout strategy, and they differ slightly mainly on the 4-hour chart. Well, only on the 4-hour chart. That's the difference between an A, B, and C, is that there's more development on the 4-hour chart with an IBO A than there is with an IBO B, and then IBO C just carries a little bit more risk than the other two. So I'm going to explain that in a lot of detail by going over a couple examples of what an IBO A looks like, what an IBO B looks like, and what an IBO C looks like. But I just want to start off by saying that an IBO A is the safest out of them all, simply because it has more confluence, more development on the 4-hour time frame. We typically have a trend change on a 4-hour chart, or some sort of a trend change, like a double top and a lower high, or a lower low and a lower high, or some kind of a triangle breakout, and so on. So an IBO A, the initial breakout A, has the most confluence because it has the most development on the 4-hour time frame. An IBO B is the second safest, I would say, but it doesn't have the full trend development, the full price action development on the 4-hour time frame. As you're executing the trade, the 4-hour chart is just developing the trend change. You just have the first sign of a trend change and not a confirmed double top and so on. So an IBO B, you have to be a little bit more cautious with, just because the trend change is just developing, okay? In an IBO C, the last one out of the three, is that an IBO C, a little bit more risk than the other two, simply because it has a 4-hour 50 EMA rejection, right? So the other ones are not rejecting the 4-hour 50 EMA, and IBO is just a break and retest of the 1-hour 50, and you're kind of trading through that 4-hour 50 EMA, and I'll show you guys that in detail. But an IBO C is rejecting that 4-hour 50 EMA, and then it has a pullback to retest the 1-hour 50 EMA. So I'm going to show you guys a few examples. You're going to really understand it after I break it down, but that is the basis of an IBO A, IBO B, IBO C. So to start off, let me show you what an IBO A actually looks like. So now that you have a pretty good understanding or a description of the three, let me go over the IBO criteria again as I break down this first IBO A setup. So with that said, let's have a look at the charts. These are the intraday charts. So we will start off by having a look at the higher time frames first. So remember, with an IBO in general, we're catching the beginning, right? The beginning of a pullback or the beginning of a run, right, on a higher time frame. So in this case, we're focusing on this daily pullback off of this major resistance up here, right? That's it. So we had this bearish engulfing, and we're looking for this pullback play. So what is the main criteria of an IBO A? What are the first few major criteria of an IBO A? Number one, we need some kind of major support and resistance level, whether it's horizontal, trend line, 50 EMA, Fibonacci retracement, whatnot. So in this case, we have this horizontal level. And when we zoom out, obviously, we need to make sure that it's actually a pretty strong level. So I have it set at 101. And when we zoom out, we can see that 101 was rejected once, twice, 3 times over here. It acted as support 4, 5, 6, 7. 7 pretty good rejections. But what about if we go further? Yeah, and then there's 2 more back in 2009 and 2008. So roughly 10 rejections off of this level. So that's a pretty good horizontal level, I would say, right? Clear rejections and so on, and pretty strong in general. So that's the first criteria met. We have some kind of horizontal or just any type of support and resistance. In this case, it's horizontal. Check. Number 2, we need to make sure that that level is actually being rejected, right? So we're looking for candlestick formation, reversal setups, and so on. So when you look at this here again, when we focus on this daily time frame, you'll notice that this daily chart has been decelerating. So it wasn't accelerating at the top, it started to decelerate. And then we had this bearish engulfing. right? So this bearish engulfing, rejecting this general region, that was the candlestick formation that actually told us that this level is being rejected because we had the strong bearish pressure to the downside. That's what a bearish engulfing does, right? So that's what we got here. Now, what about higher time frames? So criteria 1 is met, we have support and resistance. Criteria 2 is met, we have some kind of rejection and a candlestick formation. So to gauge a little bit more bias, let's have a look at the higher time frames. Are the higher time frames in our favor, right? So that's what we want to be focusing on here. So when looking at the weekly chart here, we'll notice that again, this weekly time frame has that same horizontal support and resistance level, has the same rejections and so on. But when we look closer, obviously it looks like we're beautifully kind of rejecting this level, forming a double top. So the weekly chart is giving me a little bit of a bearish bias. Obviously we're developing this ascending triangle, but we're rejecting pretty major resistance. So you can say obviously that the weekly chart is providing us with some bearish confluence, bearish pressure to the downside. Now when I look at this monthly time frame, monthly chart, not much is really going on. It's just consolidating sideways. So I don't have a bias on the monthly chart. It is just sideways consolidation. So to me, that is just neutral. But the weekly chart does have bearish pressure, and obviously this daily chart also has pretty good rejection, but again, it's a pullback play. So typically on a pullback play, we're just looking for really quick opportunities to the downside. Remember, we're still catching this at the beginning, and IBO happens right at the beginning of a run or right at the beginning of a pullback. So we're entering this position right here, but we're playing the pullback. We don't have any bearish price action like double tops and so on. So typically it's only going to be a quick in and out position down to the 4-hour 50 EMA as an example. That will be a very safe target for an IBO pullback. Whenever we're trading pullbacks, the 4-hour 50 EMA is a really good target level. It's simple. However, in this case, because we do have some weekly bearish confluence, and I have a pretty good idea that this could fall farther, then at that point you can stretch this a tiny bit more down to the 20 EMA. So that's what I'm targeting, 20 EMA, roughly 1.0, which is also a nice and even number. So pushing it a little bit farther. Now, criteria number 3. So that was just looking at the higher time frames to gauge the overall bias of the markets and how far we can actually push this position. Because it is a pullback play, so otherwise it's just going to be a quick in and out position. I wanted to see if there's a little bit more to it to push it farther. Now, the third criteria of an IBO is obviously making sure that the 1-hour chart has that clear breakout. Those lower time frames have the clear break to the downside, the break of the 1-hour 50 EMA, right? The main characteristic of an IBO is the initial, the initial break of the 1-hour 50 EMA that is giving us that trend change, right? And then we're looking for the retest of 0.32 Fibonacci, of 1-hour 50 EMA, and generally the Fibonacci area. So when you look at this here on the 1-hour chart, first thing that we'll notice is we have this triple top, 1, 2, 3, break of this ascending trend line to the downside, bearish MACD divergence, so telling us that there's a trend change coming in. So triple top, breakdown, right? So pretty good break, lower low, previous low, lower low to the downside, right? And now we had this pullback. And here we came to reject the Fibonacci levels and then started to fall farther down. I'll come back to the 1-hour chart here in a second, but criteria number 3 is met because we have this clear break of the 1-hour 50 EMA. That's what we're looking for, a clear break of the 1-hour 50 EMA with IBO setups, right? The initial and the clearest break of the 1-hour 50 EMA. Now, criteria number 4, the 4-hour chart. Is the 4-hour chart in our favor? So this is where we're going to go a little bit deeper, right? This is where criteria number 4, the 4-hour time frame, or that middle time frame between the daily and the higher time frames and the lower time frames. In this case, is the 4-hour chart. If you're a swing trader, I mean, you'll be looking at the higher time frames, and we'll cover that later as well. But from a day trading point of view, the middle time frame is that 4-hour chart. So we want to make sure that it is on our side, right? It's in our favor. In this case, it's bearish. So IBO A, remember that it has some kind of a trend change on the 4-hour chart. It has some kind of bearish price action on the 4-hour chart that we're looking for. So in this case, the 4-hour chart has this double top, that has developed prior to the entry. Then we fell, broke the phase line, and then formed this beautiful high test that was developing at the time of the entry, giving us a lower high. So before the entry, right, the entry happened here on the lower high, but before the entry, we already had the double top and this phase line or this trend line break to the downside. In this case, that was also the 1 hour triangle, right? But the main thing is we had this double top on the 4 hour time frame. That is giving us bearish price action. So when the setup actually developed, we already had bearish price action. That is an IBO A, because when you're executing that trade short prior to it, there already was price action in your favor. In this case, it was that double top, right? Sometimes it can be a lower low that develops or some kind of triangle breakout. In this case, we have this double top and this break to the downside. That is an IBO A, and IBO B, as you will see in the next example, will not have that. So that's kind of it. Now, how was this trade executed? Simply check it out, right? So you can see that it started stalling around this 0.382 level, but it popped still to the upside. The 4 hour chart wasn't done yet, so we exploded further, and then we formed this massive rejection off of 0.618 fib, and we started to accelerate to the downside. I'm going to talk a little bit, just a tiny bit about discretion here, because perfection is when we clearly reject roughly that 1 hour 50 EMA and 0.382 area, right? That is what a great setup would look like. In this case, that momentum was still going on as this was being rejected. We still had, it was at the beginning of the day, we still had low volume in the market. And then you can see when the volume started to pick up, we were actually exploding to the upside. And then we rejected all those levels and started to fall straight back down. So this is what I call a little bit of a discretion, using a little bit of discretion, simply because we broke this 1 hour 50 EMA higher. But guess what? We still rejected the Fibonacci areas. We still formed a lower high. We still had momentum. The 4 hour chart gave us that massive high test reversal, and then the 1 hour chart started to accelerate to the downside. So we had everything. But that break and retest of the 1 hour 50 EMA wasn't the clearest. But with that said, this was a 3-to-1 reward risk ratio targeting that daily 20 EMA, right? So whenever we're targeting a little bit more than a simple 1-to-1 trade, you can get a little bit, you can use a little bit of discretion, right, with your trading, tiny bit, right? I like to say focusing on about 90% precision, 10% discretion, right? So I still want to make sure that everything is lining up beautifully. And in this case, it is, from the weekly time frame to the daily chart to the 4 hour time frame. It's the best setup. It's an IBO A. It is simply the best setup because we have 4 hour confirmation already, the double tops. And then we had that clear break of the 1 hour 50 EMA. The only thing that was a little bit discretionary is the fact that we broke this 1 hour 50 EMA a little bit higher. But in general, we still formed a lower high. Still developed this 4 hour high test, and we started accelerating to the downside at the time of the entry, right, with massive volume. So typical entry at the live entry of the 5-minute 50 EMA break, right, stop loss 0.75 Fibonacci. In this case, you can see that placing my stop at 0.75 didn't really fully protect me above the highs. You could have pushed it farther, but in this case, if you're pushing it above this high, might as well push it above all-time 1 hour highs, and in this case it doesn't really make sense to take this trade. It would only be a 1.85% profit, right? So with a standard IBO, again, we're looking for a stop loss somewhere around 0.75. That is a standard IBO stop loss, so enter somewhere around 0.382 Fibonacci. Stop loss is somewhere around 0.75 Fibonacci. A safe target would be the 4 hour 50 EMA, right? So you could have taken profit at the 4 hour 50 EMA for about 1.5%. But in this case, because we had that weekly momentum, we pushed it a little bit farther to that week daily 20 EMA, which was right here, right? And 1.0 level for just over 3%. That's it, right? So mainly I just wanted to showcase the difference between an IBO A here, what an IBO A is, and it's that 4 hour chart. It was that double top, that price action that was in our favor before the trade was actually taken. So that is it for this example. In the next example, I'm going to show you what an IBO B looks like. So an IBO B doesn't have as much confluence on the 4-hour time frame. That's why it carries a little bit more risk, but it's still a really great trade because we're still going to be waiting for that 4-hour trend confirmation. It's just in this case with an IBO A, that trend confirmation is already there before we take that trade short. So let's have a look at the next example. So in the second example, I'm going to show you what an IBO B looks like. So an IBO A, to summarize, has that 4-hour trend confirmation before the trade is actually taken. An IBO B is a little bit different. It's a little riskier simply because it's developing that 4-hour trend change as the trade is being taken. That's the difference. IBO A already has the trend change, that price action development. IBO B is developing in the moment as you're executing the trade. So when we look at the charts here, right, the first thing that we can see is, again, the 4-hour chart doesn't really have a double bottom, doesn't have a higher high, but it just developed that higher low as that trade was executed. So we're going to dig a little bit deeper into this, but to start off, let's have a look at the higher time frames. So let's go through the IBO criteria one more time, just so everybody here understands it. Criteria number one, what is it that we actually need on that higher time frame? Step number one is we need some kind of major support and resistance level. So in this case, we do have one, right? When it comes to price action, we have this double bottom that's developing, really strong bullish MACD divergence. We had this low test that developed, but what is it rejecting, right? So let's zoom out. Then we have one really strong rejection over here. So it was a major low in 2016. If we go farther, you'll notice that there was a couple hits here back in 2008. But then there were really good rejections back here in 2004. Yeah, bunch in 2004 and another one in 2003. And I believe there were a few more earlier in time as well. So pretty good level and some really major rejections. Like these are pretty much extreme highs, extreme lows, extreme lows, extreme lows. A little bit of indecision here, but that was the recession of 2008, 2009. And then again, extreme lows and currently extreme lows. So pretty strong support level. And at this point, we were developing this double bottom on the daily chart. So we were developing a little bit of bullish price action by giving us this double bottom on a daily time frame. So criteria number one is met. We have major support and resistance level. In this case, again, it's horizontal. Criteria number two is we're looking for some kind of candlestick formation that's actually rejecting this area. So when we zoom in and look closer, right away we can see that we have a beautiful bullish low test that has rejected that area perfectly. Right? So criteria number two is met. We have a rejection, we have candlestick formation that's actually rejecting that support and resistance area. Perfect. So let's have a look at the higher time frames, right? So we already know that this area is being rejected. Now, this is again a daily pullback, but it seems like it might be a trend change coming in simply because we've been trending downwards for quite some time. But again, it's hard to say because we have been trending downwards for quite some time. So it's hard to really say when this trend will come to an end. And you can clearly see that we've recently just broken a major support area and retested that support area. So this is simply a pullback play. Now, again, a pullback play as an IBO can be taken quick trade up to the 4-hour 50 EMA, right? For a quick in and out position. Very simple, very safe. If you wanted to push it a little bit farther, then obviously you have to back it up with a little bit more bias. And the only reason why I considered this pushing this farther is because we were rejecting all those major levels. And if you look at this weekly time frame, it has been falling for so long, so I could definitely see a deeper pullback coming in here, specifically off of the major support, those major lows, right? And again, when we zoom out, we can clearly see that back here again, we had those major rejections, the major extreme high and the major extreme lows. So it is a pretty strong level. So just by looking at that and seeing how strong this area is and seeing that this weekly time frame has been falling for so long without a significant pullback, then this gave me kind of a little bit of a longer term bias, but not by much. It just told me that the weekly chart has potentially momentum to the upside. So in this case, I ended up pushing this to the 20 EMA. I still didn't want to play the breakout, right? But you could have. But again, safest target would be the 4-hour 50. In this case, since I believe there's a little bit of more pressure here simply because of this major support on the weekly time frame, then pushing the 20 EMA. Now obviously if you really love it, then you can push farther, but in this case 20 EMA was good enough for me. So that's the higher time frames. When you look at the monthly chart, not much really there. The monthly chart is still in a bearish trend, right? So hence why, again, you might not want to push this too far, because when you look at the monthly time frame, you have a breakdown, lower low, lower high, wave 1, wave 2 pullback, wave 3 run, wave 4 complex pullback, rejection of 0.32, weekly, monthly 50 EMA, and so on. Wave 5 is beginning. Wave 5 target would be 0.618 Fibonacci, right? So it already broke the lows, so now potentially 0.618 Fibonacci. So this is still going in that bearish run. So that is the higher time frames. So it's just a quick move to the upside. Now, what's the criteria number 3? Criteria number 3 is that initial breakout on a lower time frame, initial breakout on a 1-hour chart, the break and retest of the 1-hour 50 EMA 0.32 Fibonacci area, right? So when you look at the 1-hour time frame, we're looking for that trend change again, because we believe that the daily chart had that low test rejecting the major support double bottom. A run on a higher time frame is a trend on a lower time frame, right? So in this case, the 1-hour breakout is that trend change, is that confirmation, right? So that's again what an IBO is. It's giving us that initial breakout. That's the initial sign of a trend developing that is confirming that daily rejection, right? It's all about multi-time frame confirmation here. One time frame confirming another. So when you look at this 1-hour time frame and you zoom in a little bit larger, you can clearly see that again, we were trending downwards following this trend line. It was a pretty strong bearish trend. You can see on the 4-hour chart how fast that has fallen to the downside. But then, obviously a little bit of bullish MACD developed here, and then we popped to the upside, clearly breaking that trend line, breaking out of this trend, and breaking the 1-hour 50 EMA with a really clear break. Then we had a little bit of consolidation here, but then in general, we had that break and retest of the 1-hour 50 EMA. So that criteria number 3 is confirmed. We had that breakout, it's pretty clean, nothing really negative about it, right? It's pretty clean breakout. Number 4, 4-hour chart. Is the 4-hour chart in our favor? So let's have a look. So at the time of the initial breakout, when the 1-hour chart was just kind of consolidating sideways, you can see on the 4-hour chart wasn't really doing much. The 4-hour time frame was just kind of finished a pullback, bearish drop, pullback, that's it, right? So we had this bearish move to the downside, pretty good pullback. Check it out, this pullback broke this support and resistance level, right? And then when the 1-hour chart was just consolidating sideways, the 4-hour chart was still kind of slow consolidating sideways, still forming this lower high. So you need to wait for more development, because at this point we just have a massive run to the downside and a pullback. There's no bullish price action. There's absolutely zero bullish price action at this point when the 1-hour chart was consolidating sideways. So that is why when this 1-hour time frame was rejecting this 1-hour 50 EMA right here, it was consolidating. So it's not the best setup because of the consolidation. We want to make sure it breaks out of the consolidation first before we take the trade, right? So, but at the same time, you can see when the 1-hour chart was consolidating, there was really nothing on that 4-hour time frame that gave us bullish confirmation until this 1-hour chart pushed price a little bit farther down, rejected roughly this 0.618 Fibonacci region, and exploded to the upside with this bullish engulfing, right? And when this 1-hour time frame gave us this little bit of further retracement, and this popped to the upside of this bullish engulfing, guess what we got on that 4-hour time frame? Higher low, beautiful low test rejecting the support level. And right now at this point we have trend confirmation. It's the first sign, this initial sign of a trend change, which is this higher low. So that is the difference with an IBO B. An IBO A has that trend change before, has that price action in our favor before the trade is actually being executed. With an IBO B, it's developing in the moment. As the trade is happening, that trend change is developing. And in this case, it was that higher low. So that's why you have to be a little bit more patient with IBO Bs. You have to make sure that you really like that 4-hour time frame and you really believe that that 4-hour chart is on your side, right? And if you have doubt, you have to be patient. You have to wait for more development. Like in this case, initially, the 1-hour chart looked good, but the 4-hour chart, all it really had was a lower high. It didn't have any bullish confirmation until there was a more development on the 1-hour time frame, which gave us this beautiful 4-hour low test reversal, rejecting support, forming a higher low, right? And that is when that trade was executed to the upside. And again, when it comes to the execution, simple live entry. So in this case, it was live entry simply because we didn't have any confirmation on that 4-hour time frame. So you don't really want to utilize a entry order if you have doubts still, right? You use entry orders when you really want to take that trade and you have absolutely no doubts about it. And IBO B, sometimes like in this case, it needs a little bit more development. So you gotta be patient and wait for that live entry to happen when it actually gives you all the signs that you require, right? Such as a very clear higher low, in this case, a sign of a trend change on that 4-hour chart. So the trade was executed just as it broke this 550 EMA to the upside. That was a live entry. Typical stop loss on an IBO is again 0.75 Fibonacci. So in this case, 25 pips, right? We always want to do that. So typical stop loss 0.75. The initial target could have been the 4-hour 50 EMA for just over 1%. And that would have been nice and simple. It would have been hit literally within an hour, you know? So that could have been a very quick target. And given that it's kind of a pullback play on the daily chart still, but also a potential breakout. But in general, it's still a pullback because the majority of the trend is bearish. You could have definitely just taken profit at the 4-hour 50. But because I believe that there was a little bit more bias there because of what the weekly chart was actually giving us, then I ended up pushing this to the daily 20 EMA for 2% profit. And again, that was hit just within 24 hours later. Profit target was hit for 2%. So that is again an IBO B. At this point, you already know what an IBO A is. That is when we have that beautiful trend confirmation on the 4-hour chart. And IBO B is developing that trend confirmation as the trade is being executed. So you have to utilize a little bit more patience. In the next example, I'm going to show you what an IBO C looks like. So let's have a look. In the last example, I'm going to show you what an IBO C looks like. So we already looked at an IBO A. That is when the 4-hour time frame already has that trend confirmation before the trade is being executed. IBO B is developing the trend confirmation as the trade is being executed, right? So a little bit of a difference there. IBO C is quite different than the other two. And IBO C has a 4-hour 50 EMA rejection before the trade is being executed. So because of this 4-hour 50 EMA rejection before we take the trade, that gives us a little bit more risk because we just rejected dynamic resistance or support, which is this 4-hour 50 EMA. So when we look at the charts here, right away we can see that on the 4-hour time frame, this is the type of rejection that I'm talking about. We had a trend change. We had this double bottom. We had developed a higher high, previous high, higher high, but we rejected the 4-hour 50 EMA. And then that rejection caused the pullback, which gave us that IBO setup, that break and retest of that 1-hour 50 EMA. So before I dig in farther into the intraday charts, let's have a look at the higher time frames. And in general, this is a very interesting setup. And the analysis here is quite interesting. A little bit complex, but I wanted to show you like a whole package of what everything looks like. So in this case, this trade was executed right here. So on the daily chart, right as we were beginning this bullish move to the upside, we had this beautiful bullish engulfing, rejecting double bottom levels with deceleration, and then that bullish engulfing candlestick came in. That's when I was looking to execute this trade to the upside. Now, IBO criteria. Number one, do we have support and resistance? And in this case, we do. 1, 2, this is the third rejection. But when you zoom out farther, right, and you continue to zoom out, we have a few rejections right here. So in general, 1, 2, 3, a little bit right there, 4, a little bit right there, number 5, number 6, 3 rejections of this area right here, number 7, number 8, number 9, break and retest number 10. So that's just in the last few years, and this goes even farther. So pretty good major support and resistance level. The reason why I call them major is because we do have a lot of extreme rejections off of this general area, extreme highs and extreme lows. So criteria number 1 is met because we do have that support and resistance level. What about number 2? Candlestick formation. Is that level actually being rejected? So in this case, we do. I mean, we do have this bullish engulfing on a daily time frame after deceleration, rejecting that major support and resistance level, giving us this double bottom setup. So criteria number 2 is met. Now, to gauge a larger picture, that overall view, at this point I like to look at the higher time frames, such as the weekly and the monthly, to actually see what's actually happening there. So when we look at, in this case, when we look at the monthly chart, right, do we have bullish confluence in our favor, right, in favor of a bullish trade here? And when you look at this monthly time frame, it's really interesting, right, because when we're looking at it here, obviously we had this breakout to the upside, higher high, higher low, and then we started to form kind of like a triangle pattern. In a way, this is a symmetrical triangle that was developing here, right? So we started to develop the symmetrical triangle, and then we broke it to the upside. So we had this full breakout on a monthly chart and then a pullback. And you can see that on a monthly time frame for about 3 months, we were decelerating and holding the back end of that triangle breakout. So we broke the triangle, and then we came back to retest the triangle, low test, invert a hammer, and another low test was developing as the trade was being executed, rejecting this monthly 50 EMA, right? So in general, this is a breakout, pull back, and a retest, and it looks like this might be a monthly continuation higher, right? So that's pretty clean. So in this case, we have higher time frame confluence. We have monthly momentum to the upside. So this could actually be a long-term opportunity for those who are swing traders. Multi-time frame analysis, what about the weekly time frame, right? So a run on a higher time frame, so a run on a monthly, should start to develop some kind of a price action pattern on a lower time frame, such as the weekly chart. In this case, when you look at the weekly time frame, again, we have this falling wedge price action pattern, and at the time of the entry, we had this double bottom bullish low test, right? And then the trade was taken long, playing the breakout out of this falling wedge price action pattern. Now, obviously, I didn't push it all the way to the top, so I just took quick profit because I'm more of a day trader than a long-term swing trader, but I still like to have this longer-term bias in case I'm traveling and so on, and I want to push things a little bit farther because I want to have free time, right? So this is where swing trading comes in. If you're a swing trader and you want to have a little bit more free time, obviously you're going to hold positions for longer. And it's setups like this where the higher time frames are lining up all the way from the monthly to the weekly to the daily that really paint a very interesting long-term bias. So in this case, in my opinion, the weekly chart is confirming the monthly rejection here because of this falling wedge price action pattern. And again, the trade was executed as we had this low test on a weekly chart. Now, support and resistance level, same on a weekly as on a daily, pretty good, multiple rejections off of that horizontal level. So now we also have weekly confluence, simply because of that beautiful low test and the double bottom, and in general, the falling wedge price action pattern. Now on a daily time frame, again, end of the trend, double bottom, bullish engulfing, so this is kind of like a breakout play. Now, so from a target point of view, right, you can see this obviously is a quick opportunity, right? You could push it up to the 4-hour 50 EMA, but it's not really worth it, and I'll speak about it why in a second. So you want to push this farther. So obviously the first potential target would be like the 20 EMA or the 50 EMA, but in general you could obviously play this as a breakout and push it as far as you want, right? potentially all the way up to the monthly highs if you want to hold it for months, but that could literally last you a year, all the way up to those monthly highs, right? So I'm not the type of trader that likes to hold positions for that long. So I'm more of a get in and get out type of trader. So this is a type of setup where I do not have a profit target. I'm just pushing it as far as possible, and I'm using more of an active management approach, which when it comes to management, I'm going to show you 3 different management techniques later after the strategies. So you can come back to this lesson and kind of rewatch it again after you watch the management strategies. So I'm not going to go into too much detail here on the management itself. I would just say take a note, come back to it after you watch the management lessons, specifically short-term aggressive management. This is the type of management that was applied to this position. So I'm not going to speak much about that. I'm mainly going to focus on the IBO C setup. So you know this is more of a longer term play. I'm trying to push it as far as possible, right? So there is that long-term bias here. Now, criteria number 3. What do we need for an IBO, which is the criteria number 3? It's that breakout on a 1-hour time frame. It's that initial breakout and retest of that 1-hour 50 EMA. Now you can see the initial breakout happened over here. And this was actually a trade. This was an IBO B, right? Or even an IBO C, because we had this breakout higher high on a 4-hour chart, right? And a pullback. However, I missed this trade, right? So I'm not covering it here, but if you want to dig into it yourself, this was an IBO A with a beautiful double bottom, higher high, and kind of a retest. Now, the reason why I missed it is I never placed an entry order. This is the beauty with entry orders, is that you can, when you place them, obviously they get triggered and you're already in the position. With a live entry, when I saw this was already accelerating so fast to the upside that it was already missed, right? I want to enter around that 1-hour 50 EMA, not all the way at the highs. And with a live entry, the trade was here all the way at the highs. If you look at the 1-hour price action, you know where the cursor is. So to me, that was already missed trade, too late, right? So I didn't take this trade, but that was an IBO. That was one of the first IBO setups. Then we had this IBO C, because price action obviously continued to go farther and rejected the 4-hour 50 EMA. And then I had another pullback to that 1-hour 50. So it's still an IBO because it's still a pullback, one of the initial pullbacks to that 1-hour 50 EMA, right? So it's still an IBO. And in this case, it's an IBO C because it rejected that 4-hour 50 EMA. Now, one important aspect to an IBO C, because it has that 4-hour 50 EMA rejection, it's really important that you target a little bit more than a 1-to-1 setup. So in this case, I'm not going to be targeting that 4-hour 50 EMA. Never on an IBO C, I'm going to be targeting that 4-hour 50 EMA. There's too much risk on this setup because of that 4-hour 50 EMA rejection for me to only make 1% profit, to risk 1% and to make 1%. So in IBO C setups, I'm only looking for trades I can get about 3-to-1 reward risk ratio, right? So on any type of IBO setups where that 4-hour 50 EMA is rejected, so that's an IBO C, I'm looking for about a 3-to-1 reward risk ratio, 2-to-1 at minimum, right? Preferably 3-to-1, 3% profit, or at minimum 2% profit, right? So let's dig into a little bit further. So obviously this is an IBO setup. So criteria 3 is met. We have this breakout of the 1-hour 50 EMA and the retest. Criteria number 4 is obviously look at the 4-hour time frame, make sure it's on our side. And it is, it is bullish, but the negative is that it rejected that 4-hour 50 EMA. So in this case, again, we got to utilize patience. It's important here because we got to make sure that the bearish momentum, right, from that 4-hour 50 EMA rejection, whenever we reject a supportive resistance level, there's momentum after that rejection, right? So price action was accelerating here to the downside. I want to be patient and actually wait for price action to decelerate before I take the trade long, right? So in this case, price action decelerated on that 4-hour time frame and on the 1-hour chart and started to develop this tweezer bottom type of setup on a 4-hour chart, right? When the trade long was executed. So that was giving me a higher low. Perfect. That's what I want to wait for. Whenever there's an IBO C, I still want to wait for a little bit more confirmation when it comes to candlestick formation. I want to really be sure that that momentum from that 4-hour 50 EMA rejection is finished and I'm good to go long, right? In this case long, in some other cases obviously short, but I'm mainly waiting here for that momentum to die off and new kind of candlestick formation to develop in my favor, right? Telling me that there's a higher low developing, that there's a continuation of that new trend that is just developing. Now when you look at the 1-hour time frame, we've pretty much stalled in this 1-hour 50 EMA region for 1, 2, 3, 4, 5 hours and developed a tweezer bottom candlestick formation. So this is telling me that, you know, that bearish momentum has now died off, because I mean, we haven't gone anywhere for 5 hours. For 5 hours, we were just stalling around this 1-hour 50 EMA and 0.382 area, right? So I'm calling this an area because 0.382 is all the way down here, right? 1-hour 50 EMA is a little bit higher. So this is a zone. It's a little bit of an area. So it's still a break and retest in general, but it's just retesting this general region, this area, this zone. In this case, it's also retesting these previous highs. But again, important is that you are patient after those 4-hour 50 EMA rejections. You wait for price action to slow down before you take the trade with the trend again, right? So in this case, it slowed down for about 5 hours. When you look at the 1-hour chart, formed the tweezer bottom on a 1-hour time frame, formed the tweezer bottom on a 4-hour chart, and that is when the trade was executed right here with a live 5-minute entry again, the 5-minute 50 EMA break. And again, with no profit target, just letting this ride in this case. And I ended up shutting it down manually with a short-term aggressive management style, which is something that I'm going to teach you guys later in the lessons. So don't worry about the management now. Now, the one thing that I want to mention is a little bit more discretion here. You can see because how far the price action moved. And this is in regards to the stop placement, because my stop is not at 0.75, it's at 0.618. And I want to say this now, that 0.618 is the minimum I want to go on a stop loss, right? I don't really want to go any tighter than or less than 0.618. 0.618 is the minimum I want to go, is literally the minimum that I want to have my stop loss at, right? Primarily on IBOs, I want my stop loss to be at 0.75. But once in a while, right? Once in a while, it just seems too big, right? Like in this case, having my stop loss all the way down here in comparison to the price action. I mean, if I'm entering the trade long over here, around this 1-hour 50 EMA 0.32, and if it really went all the way down there, I mean, I'm already wrong. The trade has already failed, right? So a lot of times when the Fibonacci levels are tighter, that is when I want to have my stop loss at 0.75. That is literally 95% of the time. On IBOs, majority of the time, my stop loss will be at 0.75. Once in a while where I feel like it's just too big to have my stop loss there, it's just too wide, it's unnecessary, then at that point I will put my stop loss at 0.618 instead to have a little bit of a tighter position. So that's what I ended up doing in this case. That is the use of discretion, right? So that's kind of it. That is literally it. That is what an IBO C is. It mainly gives us that rejection of that 4-hour 50 EMA before the trade is being executed. It's the riskiest out of the three, hence why I'm looking always for a minimum of 2-to-1 reward risk ratio, at least 2% profit, preferably 3% profit, right? And the most important thing here is again, you wait for that momentum to die off after that 4-hour 50 EMA rejection before you take the trade. So that is it. At this point, you guys already know what an IBO setup is. I've showed you multiple examples. It is that initial breakout, right? The initial breakout, the initial trend change on the lower time frame. And we're catching the beginning of the higher time frame run or a pullback, right? Daily run, daily pullback. That's what we're catching here. And we're catching it right at the beginning, just as the lower time frames are breaking out, that initial breakout of that 1-hour 50 EMA and the retest of that 1-hour 50 EMA and 0.32 Fibonacci region. So that is what an IBO setup is. It's literally after that wave 1 breakout, wave 2 pullback, And then we're catching the wave 3 run on a lower time frame when it comes to the Elliott wave theory. It's an epic setup. I love IBOs, and they literally happen right at the beginning of daily runs or daily pullbacks. So you're getting in right at a really good price just when that major move is beginning. Now, I also went a little bit deeper, and in this lesson, I showed you what an IBO A, B, C is, just so you can fine tune it a little bit more. This is fine tuning, right? It literally took me years to fine tune this strategy, and at the end, it literally made sense to separate it into an A, B, C based on the 4-hour price action, because I saw so much correlation between what an IBO A is and how actually good it is, because it has all that extra confluence compared to an IBO B, which doesn't have that extra confluence, but that trend change is just developing in the 4-hour time frame. And an IBO C, which has a little bit more risk. Every single one of these is an IBO simply because of this pattern on the lower time frame. Just the difference is that 4-hour chart, right, between the A, B, and C. So that is it. I highly recommend that you guys go over these lessons multiple times over and over and over again till you truly understand the characteristics of an IBO setup. But for now, that is it. You're going to see many more examples of this within MasterClass in general, within the live webinars and so on. But that is it for the IBO setup, and I will see you all in the next lesson. Take care.